So just a few hours ago, I was convinced the RBA will be hiking rates at the next meeting in June, but one employment report later, those expectations are now in tatters. So we'll take a look at some of those jobs figures and then move on to some of the Aussie markets. Now, first off, on the top panel here, we've got the headline employment figure, which has lost 18.6 thousand jobs in April, which is the first contraction in 5 months. And each month since then was actually diminishing in positivity. So looking at the bottom panels here, we've got the part-time employment fell 7.9%, 7.9 thousand, and full-time was down 10.7 thousand as well. So not massively negative numbers, but it's enough to wobble things. And really the punch that took markets by surprise here is that the unemployment rate rose to 4.5%, which is a 4.5-year high. It's also the second month in 3 where it's up 0.2 percentage points, which is quite high in unemployment terms. So clearly this is trending higher and it's now at a 4.5-year high. So it basically means the economy or the jobs market is weakening at a slightly faster pace than the RBA expected. And that has resulted in bond markets not being very happy at all. So if we look here on the left-hand side, we've got the yield curve for Australian bond markets. They actually topped out a few days ago, but this has seen them accelerate to the downside. And if you look on this bottom left chart, it's actually the Aussie minus the US 2-year spread. And that is really falling quite lower, with the rise of US yields obviously not helping. And currency markets tend to correlate quite well with those yield differentials. So that is a bearish signal for the Aussie dollar indeed. You can see the chart here. The Aussie dollar is now on track for a bearish inside day, but we've not had Europe and the US react yet. ASX is looking at it positively, on track for bullish engulfing candle, simply because rate hikes are sometimes bad for the market. And on the right-hand chart here, you've got the performance of the Aussie pairs since the start of the year. And I did mention this in previous videos. We've had a really good run for the Aussie dollar. Look back over the last month or two, we've had some really stretched positioning on the futures markets, which signaled the sentiment extreme. And now we're seeing momentum turn lower. So the signals were there. I have highlighted them. We're now seeing downside momentum. And that brings on to a final point that I think that we are looking for an extended pullback on the Australian dollar. Now we've got the fundamentals to back that up. So looking across the Aussie pairs, this is the weekly chart. Now we've got this nice reversal candle on Aussie Swiss, Aussie Euro. They both gave like these little single bearish week candles. On the Aussie Yen as well, double top there about 114. And Aussie dollar was actually moving lower first. But when you've got pretty much every single FX major pulling back at this, every Aussie pair against all of FX peers pulling back at the same time, that does build a bit of a more bearish picture. As for the Aussie US, this I would call a rising wedge, and we reached the bearish target of that on Tuesday. And interestingly, going into this report, I would say there might be chance for a bounce because we had a false break of 71 cents in that low, and it's holding above the monthly pivot point. Yesterday, we got a bit of a rally. Today, the figures don't back that up. So I think there is potential for this to be moving down to 70 cents over the coming days or weeks. And I think the Aussie really is, if it does manage to get a bit of a bounce, it's probably going to be tempting some bears to be fading into those moves, whether that's around the 2023 high or some a little bit higher up. But ultimately, I think we're looking for a break of these lows that opens up a run towards 70 cents. Aussie Yen's an interesting one. It's thrown me around the last few days, unfortunately, but I just really like the fact that we've got this double top just below 115. Momentum's pointing lower, so I think, again, like the Aussie dollar, looking to fade into minor rallies to move down to at least the monthly pivot point or that 112 handle. Aussie Kiwi is an interesting one because I highlighted this rising wedge. It just didn't work out, unfortunately. It started off well, invalidated it pretty quickly, go to a new cycle high. So we can ignore that rising wedge pattern, but we can say that we've got this failed breakout above that 13-year high, I believe it is. Momentum is now lower. It's on track for a bearish engulfing week. So maybe we finally have seen that top. Be nice to see a break of these lows to signify that deeper pullback. And when you look against European pairs as well, pound has not been having a great time recently, but even that is rising against the Australian dollar and the euro as well. So I think we've seen some pretty meaningful lows last week, and that probably bodes well for the euro and pound against the Aussie. As always, hope that's useful and wish you best of luck with your trading.